Ladies and gentlemen, good afternoon. It's a pleasure to be here. Let me begin by expressing my gratitude to Demet Hanım and the organizers for creating this remarkable event in Istanbul. Last year I had to participate virtually from the overseas, and today I'm very happy to be here in person, feeling the energy that defines this gathering. And I hope to contribute by sharing a central banker's perspective on the evolving global financial landscape. In this regard, today I'll briefly touch upon our efforts at the CBRT under 4 headings: the current payments ecosystem, and followed by our perspectives on tokenization, artificial intelligence, and quantum computing. When we think about payments today, many of us take them for granted simply because they feel effortless. But behind the simplicity lies a world of complexity, various technologies weaving together to move money securely and swiftly, as you know. And as the Central Bank of the Republic of Türkiye, through robust infrastructure and sound regulatory frameworks, we keep the financial system open to innovation. As many of you know, we play a multifaceted role in the country's payment ecosystem, not only as a regulator and supervisor, but also as an operator and a catalyst. And in line with this role at the CBRT, in addition to the securities transfer system, we have developed and operated for decades the RTGS systems in the country, which include the interbank payment system and the end-user payments system, enabling real-time transfer and gross settlement in Turkish lira. And in 2021, following extensive work using in-house resources, we launched Turkey's instant payment system, known as FAST. And FAST is now widely used, processing approximately 15 million transactions per day as of May 2025. And FAST capabilities have been further enhanced through overlay services such as the easy addressing service or proxy addressing service, the request to pay service, and the escrow overlay service. Additional enhancements are also on the way with efforts to explore new overlay functionalities that can support a more seamless and enriched payment experience. So it's with pride that I say, and many of you would surely agree, that our payments ecosystem in Turkey is a global standout, remarkably advanced, having leapfrogged many traditional steps. And this very foundation actually sets the stage for exciting new possibilities. Then let me now invite you to imagine a future, not in decades, but just a few years from now, a future of payments shaped by emerging technologies and thoughtful innovation, redefining how we connect, how we transact, and how we thrive. And in this future, the way we exchange value becomes faster, more intelligent, and seamlessly integrated into many aspects of our lives. And this future is possible. In many ways, it's already taking shape. Of course, it will not happen automatically. It will be shaped by choices, regulatory choices, or design choices. And as central bankers, our role is to help build it responsibly. So today, I want to share with you 3 key advancements that are defining the contours of this emerging world: tokenization, artificial intelligence, and quantum computing. Each holds extraordinary promise, and each demands that we think beyond the technical to the ethical, the economic, and the institutional. First, envision tokenization as a transformative force in this new landscape. As discussed in earlier sessions today, tokenization is a new digital asset ownership model, turning assets into secure, cryptographically protected tokens. And this certainly unlocks new capabilities for value exchange. Although still in its early stages, the scale and diversity of tokenization initiatives are growing, as you know, and most notable cases are asset issuance, such as tokenized bonds, and securities financing, as we see with elevating tokenized repo transactions. I guess at this point, it's important to discuss the efficiency gains from tokenization. While the gains would depend heavily on both the nature of the asset and the structure of the platform. For highly liquid and standardized assets that are already traded in automated systems, the added value may be limited. However, for illiquid, non-standardized or tangible assets where manual post-trade processes are prevalent, tokenization can offer significant improvements in efficiency, transparency, and settlement speed. Of course, platform design also matters. Siloed systems tailored to single issuers or assets often constrain scalability and interoperability. In contrast, programmable platforms that support multiple issuers within a unified environment can foster broader innovation and network effects. Of course, nothing is free. These benefits come with potential costs. Developing and operating flexible, high-functioning platforms, especially for complex assets, requires significant investment and sound governance. Tokenization is therefore most valuable where existing frictions are high and programmable infrastructure offers a clear solution. And all this tells us that realizing the promise of tokenization requires careful design, coordinated governance, and proactive risk management. And accordingly, the growing relevance of tokenized financial systems requires central banks to evaluate how these developments intersect with their mandates, our mandates. After all, the emergence of programmable platforms and digital assets introduces new operational and policy considerations. Particularly when applied through programmable platforms, tokenization intersects with several tasks of central banks, including payment systems, financial stability, regulatory oversight, and even monetary policy implementation. And these changes may influence how central banks design, implement, and coordinate the tools and infrastructures necessary in a tokenized environment. In this framework, one area of consideration is the provision of a reliable settlement asset within tokenized systems. There is no doubt that central bank money remains the most secure and liquid form of settlement. Therefore, a key policy question is whether it will be or it should be made available in tokenized form either through CBDC or through interoperability mechanisms that link tokenized platforms with existing RTGS systems. And the second one is financial stability. From a financial stability perspective, integrating multiple financial functions such as trading and settlement within a single programmable infrastructure may introduce new concentration and operational risks. This calls for robust governance frameworks and careful monitoring of systemic implications. Regulatory adaptation is equally important. Central banks may monitor tokenization developments and assess whether token arrangements that are within their scope, of course, align with the broader payment ecosystem. And where necessary, cooperation among authorities is essential to maintain effective oversight in this evolving landscape. And lastly, tokenization may influence monetary policy implementation, particularly if programmable platforms begin to affect liquidity, demand, or transmission mechanism. And these implications, while still emerging, require continued analytical attention. And at the CBRT, we actively monitor developments in the space and carefully assess their potential policy implications. Our work on financial innovations, including the digital Turkish lira, sits precisely at the intersection of these issues. And as we move forward, we remain committed to ensuring that any future financial architecture continues to support price stability, financial stability, and public trust. And in parallel, the increasing complexity of today's financial landscape and the growing volume of real data have made artificial intelligence tools not only useful, but also essential for modern central banking, from enhancing risk assessments to supporting faster data-driven responses, artificial intelligence is becoming an integral part of how central banks operate. AI's ability to detect anomalies, learn from behavioral patterns, and respond dynamically to evolving threats is particularly well suited to strengthening the integrity of digital payment ecosystems. So, for central banks, AI enhances cybersecurity defenses and operational resilience, reducing vulnerabilities that could otherwise threaten financial stability. When integrated responsibly, AI also supports regulatory supervision by providing insights enabling more proactive oversight. Accordingly, at the CBRT, we are actively integrating artificial intelligence and machine learning to support our mandates. Of course, as we advance these capabilities, we remain conscious of the challenges because AI is not infallible. It requires vast amounts of data and transparency to avoid biases and errors, as you all know. An important issue here is the need to balance accuracy with interpretability. Equally critical issues are algorithmic biases, or fairness, structured data, and data privacy. In this sense, transparency, fairness, and privacy must remain priorities as AI takes on bigger roles in financial ecosystems. And looking further ahead, quantum computing emerges as a revolutionary technology by using the principles of quantum mechanics to perform super computations. And as the slide indicates, the early 1990s actually witnessed the introduction of experimental quantum computers, but we still do not know when we'll be able to see its practical applications. Yet, we must be ready for quantum computing, considering its potentially large impacts on the financial system. What we know so far is that with its unparalleled computational power, quantum computing can offer significantly faster calculations and solutions in certain areas, of course, extending from financial modeling to fraud detection and to optimization processes. These are undeniably some benefits central banks anticipate to better understand and manage risks. However, the same power also presents challenges by endangering the cryptographic algorithms that protect the payment systems, and hence it might pose a threat to financial stability. And in this sense, quantum readiness is very critical for central banks and the financial system to be aware of the potential risks and act proactively. And this means that we should intensify our work on the research and development of quantum-safe cryptography, new encryption standards that are robust against quantum attacks. And in other words, we need a quantum readiness roadmap, which includes a plan for transition to post-quantum cryptography. And the research initiatives in this area, particularly those conducted by the BIS Innovation Hub, are highly valuable in this sense. Because this proactive approach is essential to safeguarding the confidentiality, integrity, and trustworthiness of payments as technology evolves. And I see it as a strategic imperative for preserving trust and securing a competitive edge in an increasingly complex financial landscape. Well, all this reveals that progress comes with risks. But as the saying goes, everything you've ever wanted is on the other side of fear. So to move forward, we must push beyond hesitation and, of course, with caution and vigilant leadership. In this respect, the success of future payments ecosystem depends on the thoughtful integration of innovation and risk management, where every technological advancement and each regulatory measure works in concert to uphold stability, trust, and efficiency. And our role as central bankers is to guide this evolution responsibly. Balancing speed with security, innovation with stability, and accessibility with resilience. I believe by carefully orchestrating the adoption of tokenized assets, CBDCs, AI-driven oversight, and quantum-safe defenses, we can build a solid future payments infrastructure. And this vision is within our reach. We just need to work on it in a determined way. As Herbert Simon, a Nobel laureate in economics, and one of the founding fathers of AI once said, "One finds limits by pushing them." And I truly believe in this. Thank you for listening.